Hi, I'm Kate Miller and welcome to Property Focus. Making headlines this week, the Reserve Bank of Australia leaves the cash rate on hold again and auction activity continues to flounder. But first, to our lead story. Australia's capital city property markets have taken a hit, with values falling by a seasonally adjusted 2.1% in the March quarter, the latest RP Data Rismark index has revealed. While the result confirmed ongoing weakness in the property market, RP Data research analyst Cameron Kusher said it was important to differentiate between the seasonally adjusted result and the raw data.
Now, I think probably an important thing to say is that seasonally adjusted looks at how the market's performed historically during that period and then compares this year's performance to how it performs historically. The raw number figures aren't actually that bad. So the raw numbers, what's actually happening with someone's home. So over the quarter, values were down by 0.4%.
Mr. Kusher said the bulk of the lacklustre quarterly result was driven by a very weak January.
It is a big fall in seasonally adjusted terms, and for a March period it has been very slow. But a lot of the damage was done back in January, where we saw very low transaction volumes and quite large falls in property values. But over the last month, not so bad.
Investors and homebuyers have been spared once again, with the Reserve Bank leaving the cash rate on hold for a sixth consecutive month following its May monetary policy meeting. Peter Bromley, General Manager of LJ Hooker Financial Services, told Smart Property Investment rates could remain on hold for several more months.
Household savings is strong at the moment, which is a good thing, and therefore discretionary spending in terms of the public is under control. So I think they're things that will help mitigate a rate rise in the future. Employment's pretty much very strong, and so therefore that can have a flow on through to spending. So I think the Reserve Bank will watch certainly the household savings factor over the next few months, and obviously employment.
And the nation's property markets failed to deliver any surprises in the last weekend of auctions for April. In Sydney, just 53.9% of properties cleared over the weekend, according to Australian property monitors, compared to 71.4% for the same time last year. In Melbourne, 50.5% of properties listed for auction managed to change hands, a far cry from the 78.4% achieved this time last year. And in the smaller markets, just 23.8% and 18.8% of properties listed in both Brisbane and Adelaide sold. Don't forget, the May issue of Smart Property Investment is now on newsstands. Pick up your copy to find out which regional centres are primed for growth, as well as a complete guide to investing in the USA. And that's it for Property Focus for another week. Thanks for joining us. I'm Kate Miller. See you soon.